When the next trading session starts, when the momentum picks up, there's one strategy I love, and this is actually the first strategy I started to trade 10 years ago. And I just found my notes and I was thinking, this strategy still works, it still performs, and it's crazy to think because markets change, or a lot of people tell you that markets change, but this approach still is solid. I'm gonna go through the whole trading plan with you. I've also automated the strategy, automation software Profectus AI. Can check that out as well. I'm gonna dive into TradingView because most of the people watching want to see the trading plan and manually go through the charts and do the work there. It's a crazy strategy, I love it. Let's dive into the first lessons. So the strategy, time frame is daily and 1 hour time frame. These two time frames are the best. I use the daily mostly for my targeting, and the rest is all in the 1 hour time frame. It's super simple, but those are the two time frames you use. Here you have an example trade, by the way. We're gonna dive into 2 trade examples in this video, and during this whole video I'll drop nuggets. What is important, what do you need to know, what performs the best. So make sure you watch it from start to finish if you want a profitable strategy. Step 2, yesterday direction. On the daily time frame, if we go there, if you don't have bearish or bullish candles like I have right here, then it might be difficult to predict what is the next candle because you don't know what yesterday's candle was. And how I learned that was a daily direction prediction skill that you need to develop to predict the next day of price action. In this simple example, I just used yesterday was a bullish candle, then the next day I trade in the bullish direction. And the flip side is if it's short, I of course look at yesterday and then we need to see a bearish day yesterday. So I just trade with the momentum. That is how I keep it very simple, and data did tell me that that was the best. Let's go back to the right place. There we go. So yesterday direction is super important. Yesterday needs to be either a bullish or a bearish candle and you trade in that direction. Then the 1 hour shift in trend. If you see this, if we zoom in a little bit, if you see this strong bearish trend, a lot of people draw in trend lines and all of that. You can draw in trend lines if you want to, but we can also visually see that we are in a strong bearish trend here. Price is just making lower lows, lower highs, and you also have a great tool for this where you can draw. And this is the formation, right? We are making lower lows and lower highs. This is the most recent high. So if that is taken out, we have a trend change. And what I'm trying to do is catch the higher low of that trend change and then trade in one direction. Sorry for my drawing skills. Better in trading than drawing, but I think this might make it very clear for you to understand, okay, this is a daily trend change, or on the 1 hour trend change, and on the daily you try to get those daily moves, right? You only take this setup the first 2-3 days of the daily shift, so you want to be early in the 1 hour time shift. Then 4, pivot aligns. So we have found this bearish trend. Now we have the break of the 1 hour 50 EMA, and that is one of the indicators we need. The second indicator we need is the pivot, and the pivot you can just find here with indicators and then go to pivot. We can quickly see, there you go. I have these pivots, but it doesn't really matter what indicator you use. Just set it on traditional, and that's all you need to do. And then the pivot's time frame is daily. That's all you need to know. And that's calculated every end of the day. But more about this execution later. That's the pivot. Where is the pivot on my chart? I cannot see it yet. I will show you soon. And then the EMA is just exponential moving average 50. And just keep the rest the same. Super important to get a break retest of that with the pivot, and that is the pivot aligns rule. How does that look if we go back in replay mode? What we can see here, now the pivot is plotted, and when it was plotted we did see, okay, the pivot is here and it is higher than a moving average, and then, well, we want to see if it aligns, and that is that rule. What I do, and that's how I automated it, just find the moving average, find the pivot, and then have the pivot value, and then add a few pips above it, a few pips below it. And then if the moving average is in that range and the pivot in that range of this high, this low, and this moving average, then you have sort of a zone. What you also often see is that people stack this zone also with 0.382 Fibonacci retracement. You can do that, but in general, just the pivot and just the moving average is already enough for me. And then we have this range. So we want to time this first pullback at the place where the pivot is and the moving average aligns. And sometimes that 0.382 as well, because we have then a lot of confluence points here and we are expecting that price moves higher. Why? Due to the path of least resistance being to the upside. Where is price easier to move? Well, it's easier to move higher if we reach all this value. That is rule number 4. The pivot needs to align with the moving average, and then we're looking for longs. Then how do we enter this setup? Super simple. If the pivot is the nearest to current price, we place an order on the pivot, like happened in this example. If the moving average was higher than the pivot, so it was a little bit above it, but still within that range we just defined, then we place our order on the moving average. That is just an easy filter. If you're building this strategy with, for instance, Profectus AI, at the end of your algorithm, you have your buy execution, and you just have 2 versions of buy pendings and 2 versions of sell pendings. One is if prices, if the moving average is the highest, then you take that buy pending, and otherwise the right buy pending, and then you know, okay, where to, or your algorithm knows where to place the order. But we, as manual traders, we can just see with our eyes, and then you spot, okay, the moving average aligns with the pivot. And that's all we need to know. Now we are live in this trade, and the target. Well, on the daily time frame, we did spot, okay, yesterday was a bullish candle, so today when this shapes up, so the next day you have the pivot, you have the moving average aligning, all of that. The big question is, okay, what to target? And this is where a lot of people go wrong, and this is something I had to solve when I was trading this manually, because I couldn't test like what is the best target. I couldn't just back test a million times because I had to do it manually, right? So for me it was really difficult to see, okay, what is the best target? Is it targeting the daily moving average 20? Is it targeting the daily moving average 50? Is it target recent highs, target a weekly moving average, or a weekly high, a weekly low, a trailing stop loss, a fixed risk reward? What is the best? And that's like what made it so difficult to be very consistent with this approach, because some people just had that big target and some just had a quicker target, and it all depends like what the distribution was, right? Sometimes he was right and then I was right, and that makes trading very inconsistent or very difficult also emotionally, because you're always thinking what to target, where do I exit the markets, what's the best thing to do. With this system, just on GJ, with this particular example, what a good target is the daily 20 moving average. And I'm testing more and more, so subscribe on this channel, and in a few weeks from now I will drop more findings on this strategy, but also all the other strategies I've been sharing, because I'm testing, and those ongoing tests, when I find something interesting, I will drop it. So make sure you subscribe below, and then you don't miss out. If you change this moving average back to 20, and then you target that, front run it always. So what I did back in the days was not 20, but 18, just to be always slightly before the 20. Same if you target the daily 50 EMA, I always target the 45. Not because 45 is that special number, but it is just because it is easier to then front run it. You have like a mechanical rule, how many pips below the moving average do you want to target. I just changed the moving average a little bit. So if we go back to the 1 hour now, and you see this, momentum is picking up. This is then for the Asian session. And yeah, we are moving higher, and the next pivot doesn't really matter, we can hide it because we are already long, and price is not doing much, and then it starts to move higher and banks. So this is 2.7R, that's pretty decent, but there's another rule that you can add, and that is trailing your stop loss. What I've found based on at least the 200 trades I just backtested on GJ since 2015 till now, not that many filters, but just raw data told me, okay, you can better give it some room. Often it happens that we chop around, and if you then too early trail your stop loss, it goes out for break even, and that's not what you want, right? You have to give it some room, and then you can of course have bigger targets as well, depending on your overall higher time frame confluence points. Do you target the daily 20, daily 50, 0.382, Fib retracement, whatever you want? You can test it all, obviously, but I think the easiest is to just target the daily 20, wait for an overextended daily time frame. So if you go back to this daily, what do we have? Just basic price action. If you just delete this and keep it very simple, delete this for a minute as well, you can see how overextended this run to the downside is. So if that happens, you often can target a little bit further. Instead of the daily 20, you target that the daily 50, or you target 0.382 or 0.618 retracement, which is here. And then you squeeze out a little bit more profits. You see that? So there you go. You squeeze out a little bit more profits. That was 3.7 or something I did spot. And those are all little tricks. And then management, we covered that. So those are the 6 steps. But before you go, let's dive into another trade example, because just seeing one is not enough to really bring this home. Let's now do it without explanations. Just boom, 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 boom. Just take the setup and go. All right. First, I have to find the setup. I didn't draw all the setups here because I almost never draw setups on TradingView anymore. Like I said, it's all automated. You can see it here in my MetaTrader. And yeah, this is the setup. Let's go back to replay mode. It's quite an interesting setup. Here we have the 1 hour time frame. And let's get my pivot back. What you can see here is we have this bullish trend. It's not a great bullish trend, but still we are in a bullish trend. Then price rolls over. We broke this recent low, and then we had this big breakdown. And yeah, then price broke the moving average, and we have that pivot. Again, what is the rule? We have a zone drawn, an upper level and a lower level. And if the moving average is within this zone, which is the case, then we have both aligning, and then we have a stack. We have a zone where everything is stacked together. Right now, instead of the first, compared to the first example, the second example has the moving average being closer to current price, and therefore the entry is lower. Yeah, you can argue that the entry is there even, but there you go. And yeah, stop loss wise, did we cover the stop loss already? I don't think we have, so I'm gonna dive into that right now, because I've tested 4 different stop losses. I always test POP, so percentage of price stop loss. You see this 39% here, right? So if price moves 39%, that's your stop loss, or whatever you make it. I always test like 0.5, 0.6, 0.7, 8, 3, like all these values I test with automation, and then I know it, right? Then I know, okay, this is the best stop loss. For instance, for euro dollar, I know on average what the best size for that is. For gold, for even for Ethereum, Bitcoin, everything I trade, I know what the POP, the percentage of price stop loss, is in general the best. And for GJ, normally it's around 0.6 or 0.4 depending on the time frame you trade, but 0.6 is decent. But for this particular strategy, I found something better, and that's my other approach to stops, which I also always use, is the ATR. So the average true range. You go to indicators and then type in average true range, and you'll have this overall red line here. And what is important is if you go to the entry, so hold your cursor on the entry, then to the left you see here this value, right? So the value is 36, 37, 36. Multiply that by 1, and then you have a 36 pips stop loss. That's way too low. If you double it, then 72, it's still not good. But if you triple it, that becomes way better. Yeah, so 3 times the multiplier is more or less the best stop loss size. What I always used to do was just draw a fib, And then you have this 0.382, the 1 hour moving average, the pivot, all aligning. And then you place your stop loss at 0.8, which aligns here. But doing this with automation, you can of course do it. You just have to calculate a lag like this and how to draw it and all of that. It's a little bit extra work and it is not really better in my opinion. So therefore I just use the ATR, multiply it by 3, and then you have always the same stop loss. Remember the daily, what was the target? The daily 20 or daily 18. And there you have it. So now we go back to the 1 hour and this is the setup. This is all you need to know. Right now, price is tanking and banks, which is great. So that is the setup. If you want to learn more, like I said, you can subscribe to this channel. We have a lot of tutorials. Make sure to watch those tutorials, see what type of strategies are out there. There are literally millions of ways to trade the markets, but just a few work really well. And therefore we automate them all, we test them all, and then we share results with you. But we also teach you how to automate and how you can automate any strategy you want, because you need to be an independent trader. You want to make this work for you. You have your trading goals, your goals in your life. And if you want to reach them, you need to be able to do it yourself as well. So we help you on that journey to be accountable for your own results. And whatever trading strategy you see, if you watch this video till the end, then it's very certain that you also watch other trading strategies on YouTube. And we just teach and preach that you test them, and you test them automatically to quickly see what works and what doesn't. And if you do that, then you'll have a good understanding of, okay, what to do next in the markets. What is my strategy to get funded? What is my strategy to build my track record or stay consistently profitable and make money out of the markets? That is so important to know. Thank you for watching, and I see you in the next one.